Hi there, welcome to Kneppy Invest and welcome to the final day of March. If you watched my technical update video yesterday, I said or stated that March 30th was the final day of the month. And then I realized a few hours later, I was going to say a few days later, a few hours later, that no, April had 30 days, March had 31 days. So I did realize a mistake in the end, but sometimes I have to think about how many days a month has. But that's okay. There's other more important things in my brain. Anyway, a negative day on the market. This was to be expected. So no shocks today. In fact, I thought the XJO would have been down anywhere between 0.5 and 2%. So it's within that. Maybe more towards the worst case scenario, which would have been down 2%. So XJO currently down 1.5%. And I thought we might have only been down 0.5% if mining had a good day. Mining has not. In fact, resources down 2.96%. So that's interesting in itself and a pretty bad day for tech, which is understandable, and also small caps. So overall, this is to be expected. And who knows what's going to happen over the next week. In fact, I'll show you a couple of brief articles that just mentions that special word, which I've been talking about, and really understanding that is highly important when it comes to not only the stock market, but also, well, indices, but also to individual companies. And we'll have a look at that particular article in a second. And also did have a suggestion in regards to a live wire article, a buy, hold, sell one, featuring 7 companies. So I'll quickly show you that, and maybe I'll do a stand video on that particular article, sort of like an article reaction. Also have a look at another article from Capital Brief in regards to Accent Group, and also a market index email I received that did mention the weird trading in ANZ. Yes, so other people did pick up on this. So yeah, that's interesting. And they also mentioned in this market index article about the insider trading within, or in, maybe not within, but in Helia. So have a look at that article. Now, after I've gone through all these articles, we'll have a look at the ASX today, and then we'll have a look at about 34 minutes left in trading. So who knows, maybe we'll see a rally in the last 30 minutes of trading. And then we'll have a look at the ASX. That's exactly what we're doing, having a look at the ASX. But we'll have a look at the best and worst performing sectors, indices, and also companies. And then we'll have a look at the top 5 stocks of the day. Quite a few companies didn't make it, but 2 companies who made acquisitions at the top of the list, and the market has reacted quite well. Another company that went down a fair bit on Friday in regards to something happening in France, some price gouging or something, and they've clarified the situation. And a silver company had some sort of production update. And the last one is a company with a D code of a very popular sport in the world, sporting competition in the world. So I find that company fascinating just because of the T code. A few companies who do not make it include MetaVisor, Rocket Boots, Auric Mining, and Mesoblast. Had a chance to be in the top 5, but just missed out. In fact, if the share price was up about 10%, I think Mesoblast would have made it into the top 5, but unfortunately it is not. And then we'll have a look at one of our comments, just one. One of our comments in regards to, I think it's debt recycling, I think. Yeah, we'll do that one. Okay, so let's have a look at some of these articles that I've just mentioned. And in Saturday's answer reply videos, there was a couple of questions that were featured. One question in regards to ANZ's absurd sell-off on Tuesday, 25th of March. So a lot of selling came in right on 1 p.m. or maybe it was 2 p.m. Sydney time. So it was right on the hour, which is interesting in itself. Someone did mention that that's when the American futures opens up. This was not a broad-based or a big four related sell-off. That's something I did discover as well. And whoever wrote this searched everywhere for a catalyst, announcements, Twitter, AFR, volume data for potential block trades, but there was nothing. The only usual thing I could find, or this person could find, was 11.5 million shares traded hands that session compared to its 20-day average of just 4.9. So the only conclusion I can come to is that some big fella offloaded a ton of shares and purging all the buy orders. And I think that's what I said as well. Someone just decided to sell a whole bunch of shares on market, and that will lead to the share price dropping a fair bit. In fact, I would never recommend anyone doing that if I could recommend. If I was recommending a fund manager selling their shares, don't dump on market. Don't do that. Anyway, in fact, they also mentioned this article that could have been a very small opportunity to buy some shares of ANZ for the cheaper price and then offload them a few days later. There's another interesting article or section in this article about CEO sell downs, and they did mention, Helia. This is about Helia. In fact, I talked about this in that answer reply video as well. Now, in this particular market index article, they're not really saying anything negative. Not saying that there should be an investigation. In fact, they're sort of hinting that this was a very wise move from the CEO, Pauline Blythe-Johnston. Anyway, so what's curious, though, is that Helia was riding just a few weeks ago in February. It smashed earnings expectations with the sweeping beat on revenue, net profit and dividends, sparking a stock surge of up to 28%. Put it all together, looming contract risk, the CEO cashing out, and a stock trading at record highs after a rapid run-up, and it starts to look like a glaring red flag. Some people do look at that, CEO cashing out, that sort of thing. And I wouldn't say cashing out, but offloading shares. Was it 7 times in March? That could be a negative sign, yeah. So, maybe she's just being really smart. But I do think there should be an investigation. So that's interesting email I did receive from Market Index. Get these. I think this was the weekend edition or something. I do like that email. Onto Accent Group. This is really interesting. So Capital Brief released this Accent Group shares fall on potential Fraser's deal. I was like, ooh, this is interesting. And then I went to look at how much the share price had fallen, only down 2.2%, with the overall market's down 1.6%. I'd say the share price is down because the overall market's down, not because of this particular announcement. So sometimes you have to fact check these sort of articles. They're saying it's down because of this. It wasn't negative, I didn't think. Anyway, if it was negative, the share price would be down like 5 or 6, maybe even 10%. So that was interesting. I think they're just looking for reasons. Again, putting the blame elsewhere, just not on the individual, or not on finding blame elsewhere instead of where it's really at, and that's just weakness in the overall market. And the other one was this one: Australian shares slump amid tariff uncertainty. There's the word again, uncertainty. I'm coming to realize maybe this has been a slow process, and processes sometimes can be more important than the goal. If you go through the processes, you come out in the end probably near your goal. So I think the process is just as important as the goal, and it has been a slow process for me. And I've come to understand that uncertainty is highly important. Uncertainty is so important, not only for the market itself, for the indices, but also for individual companies. As soon as you increase the uncertainty, more than likely you will see a pushback or pullback in the share price or the overall market. So that is where we are stuck right now. A lot of uncertainty in what's happening in the United States because of Trump. We just don't know. No one knows where he's going to go next. And if he keeps on going down this path of absolutely adoring tariffs, I think it's going to end badly. Anyway, and when that ends, I don't know. So that's another look at uncertainty. And here's this article, Livewire article. Someone suggested I do a reaction to this. Buy, hold, sell 7x20 stocks with strong balance sheets. And the question is, what's the definition of strong balance sheets? I've heard that some people call what I would consider strong balance sheets as lazy balance sheets because they have a lot of cash on their balance sheet, which I wouldn't consider lazy. I'd consider that strong. The way I would define as strong balance sheet would be a company that doesn't have much debt. So maybe a low debt to equity. And I think my definition of strong would be a little bit different. And I'd wish they would maybe try to explain what strong balance sheet is. Anyway, so I might actually do a reaction to this one. See which companies, I haven't gone through this yet. See which companies they are suggesting to you, the want to be a reader of this particular article. Okay, now on to the ASX Today. And let's just refresh this. Oh no, it's just not much happening. So pretty bad day for the market. And the interesting thing, I suppose, is really it's gone nowhere since about 11 o'clock. So we did see the initial drop, and it's really gone sideways since then. So no rallies and no drops. It's just been going sideways. So consolidating, which probably suggests there's not a lot of action, not a lot of interest in the bears or the bulls at this point in time. And I think that's just uncertainty. Why X20 is a prime hunting ground for ASX returns. I would agree with that. Why investors are divided by ProMedica's share price wobbles. Ooh, that's another really good article to read, I think. Looks like that's from Ausbiz. Anyway, I don't want to get go on a tangent here. All sectors are down. Best performing sector is utilities. Worst performing sector is materials, which that is a little bit surprising. I thought there might have been a little bit of strength in mining today, but no, that's not true. But bad day for all companies today, unless you made an acquisition. Anyway, banks have had a okay day, relatively speaking, only down 0.44%. That's interesting because if one of the reasons why the market is down today is because of a maybe perceived greater risk of a recession, banks will be significantly affected by that. Don't forget, banks are cyclical and they're not defensive. In fact, banks, let's have a look. Let's have a look at the GFC. Let's go have a look at CBA. I won't have a look at Macquarie Group because that will prove that banks are cyclical, because I do believe Macquarie Group is a little bit of a different company these days. But if you have a look at that's the wrong one. If you have a look, that's the COVID-19. Have a look at the weekly chart. And go all the way back to COVID-19, not COVID-19, what's called GFC, and CBA dropped. Let's have a look. Price, CBA dropped 61%. Share price of CBA went from $62 to $23.85. And I would say that all the banks are like that during the GFC. So again, banks are not defensive. They are cyclical. In fact, let's have a look at Macquarie Group. Why not? Macquarie Group. Let's see how much this dropped. But I have heard that Macquarie Group was or is a different company these days. I wasn't investing back then, so I don't know. And I haven't done any research. So Macquarie Bank dropped 85%. Ooh, 85%. And a pretty nice bounce after that. Anyway, so let's move on. Banks are not cyclical. And gold down 1.21%, which is interesting because gold ended last week pretty good. So maybe there is a possibility that gold has dropped. No? No? Why is gold down? Look at, is it currencies? Could be why? I don't know. I'm at loss right now. Why gold sector is down? At a loss. ASX 20 only down 1.41%. So relatively speaking, I suppose it would have been best to have all your companies in the ASX 20, but the majority of companies in this particular indice are, in my opinion, are not long-term holds because your returns are going to be fairly mediocre. I want returns between 15-20%, and you're not going to get that from most of the companies on the ASX 20. 4 companies actually up, which is interesting, and those 4 companies are Wisetech. That's a shock because tech's down. Wisetech, there was a mention of Wisetech in Capital Brief, so I did miss it. So is this something to do with the board? Well, if I remember correctly, it could have been 2 new members. Oh my geez, I can't type. 2 new members on the board or something. There we go. So it was not marked price sensitive, which means I missed it. Appointment of independent non-executive directors. There you go. So it looks like the market does like that. So that's a little bit of a shock. I would have expected Wisetech to be down if I didn't know they released that. Transurban had a good day. I would describe Transurban as defensive, without doubt. CBA, definitely not. Definitely not. And Telstra Group, yeah, I would say Telstra Group's a little bit defensive. A little bit shocked that CBA is up when it's by far the most expensive company on the ASX. Yes, I'm going to say that. It's by far the most expensive company on the ASX. A company that's not going to grow versus a company that's going to grow pretty strongly. Yeah, I'm going to say CBA is the most expensive company on the ASX, possibly ever. No, that's going a little bit too far. And the worst performing company in the ASX 20 is Rio. Ooh. So it looks like Iron Ore's had a bad day. Rio Tinto, BHP, and Fortescue all down pretty big. I've been having a look at BHP's chart a little bit more. So it is below $40, which has been a good time to buy in the last, well, not the last few years. Well, yeah, the last few years, about 4 years. So if it goes below about, $40, think about buying. But yeah, the chart is looking weak. So that's a weekly chart, and it is looking weak. A weekly chart looking weak. Okay, so let's move on to stocks of the day. Top gainers. Yeah, this video is not going to be 30 minutes long. Top gainers, a company called AU Cyber, up 80% on $376 of turnover. Should I have a look at that? No. Markup is $824,000. Norfolk Metals, that is in my top 5 with the ticker code NFL. Had to have a look at that announcement. In fact, they are the best performer today by percentage change. So we'll discuss that company later on. Rocket Boots had a chance, up 20%. They did a placement. The placement was priced at 8 cents. Share price is up 20%. So obviously the market likes this particular placement for Rocket Boots. And in fact, if we have a look at Rocket Boots' chart, this might be looking interesting. No, not quite there. Oh, that's the weekly chart. Let's go back to the daily chart. Yeah, not quite there. It's still a little bit too much liquidity when it comes to this company. Really nice volume coming today. So this could be a bit of a kick up for the volume. Maybe this could pick up the volume. Probably the one thing I'm looking for is some volume coming in for Rocket Boots. Apart from, I'm looking for some really good financial news from the company, like a really good Appendix 4C for April. Yeah, for the March quarter, which we'll be getting in the next 4 weeks. And anything else here of note? DXN, something to do with a Darwin something, but fairly low turnover. And Breakthrough Minerals. Breakthrough Minerals, they made an acquisition or something. Yeah, Breakthrough secures high-grade WA gold project. Yeah, I actually did see that. I went, oh, that's sort of interesting. I had a quick look, but I can't remember what it was. But share price is only up 30%. So let's have a look at the chart for BTM. I've never heard of this company before. Breakthrough Minerals. This could be the breakthrough for this company. But based on the chart, no. Yeah, the chart looks pretty horrendous. Oh, they've done a share consolidation. I can just tell by the way the share price was trading before about December. Yeah, they without doubt did a share consolidation. I can definitely see in the chart. Anyway, and they probably needed to because the share price looked like it was probably down to 0.01 cents. Let's have a look at the top gainers by market cap. And Southern Electrical Engineering up about 5%. They made an acquisition that is in my top 5. In fact, it's coming in number 1. What else do we have here? I'm hoping Environmental Group's in this. Come on, Environmental Group. There it is, down near the bottom. Up 6.25% on the back of an acquisition. So those are my two top stocks. I don't think number 3 would be on here. Might be in the top gainers by market cap. No, it's not. So that's Orora. Share price down a fair bit on Friday because of something happening in France with one of the most recent acquisitions, doing some naughty stuff. And let's turn our attention to, and by the way, nothing else here. Yeah. If you're in the BBUS, you've had a good day, but you don't usually have a good day if you're in that. And Global X Ultra Short Nasdaq 100 SNAS had a pretty good day, down or up 9.23%. And I would never own these. And the reason why is if you have a look at BBUS, let's just have a look at BBUS. This could maybe the only reason you might buy these is just hedging. And the reason why is because over time, but they go down, because this should be inversely related to the overall market. So if Nasdaq goes up over time, the beta bears or BBUS should go down through time. So this is definitely just short-term, a play, or maybe just a trading play. And if you're trading this would be a nice trade, which is understandable because Nasdaq has moved into a bear market, not a bear market, has moved into a downtrend. It needs to fall another 10% for it to be defined as a bear market, about 10% anyway. And so if that's moved into a downtrend, this should move into an uptrend. There you go. And that's it. So let's turn attention to the top losers. And sometimes it's hard to know if some of these companies are down just because of their overall negative sentiment in the market or they've released something bad. But like Key Petroleum down 24% on $2 of trading. Yeah, we don't have to look at that. African Gold down 19%. Fairly big turnover there. I'm going to have a look at this one. I did not have a look at their announcement if they did release one. African Gold. Impressive drilling results continue to deliver a DDV. And obviously the market's gone, it's not that impressive. Share price down 19.2%. Let's have a look at the chart for A1G. Where do you think they're mining, or where do you think they have their projects? I wonder where. Could it be in Asia? Maybe South America? Antarctica, maybe? Greenland? I'm not sure. I'm going to have to look at this company to see where they've got their projects. Anyway, but before today, the chart actually looked pretty good. So this could be by the dip. A nice little run up in the share price back in October. And then again, another one on the 25th of March, share price up 36.4%. So 26th of March. Oh, they announced a strategic partnership with Montage Gold. There you go. In there. Ecograph had a really good day not that long ago, now down. Same with Bellarorox, Emotio. No, nothing here. I think a lot of these is just down because of low liquidity, and although this Decider AI industry is down, this has been popping up all over the place recently. Let's go have a quick look at this chart. ADAI. They must have changed the name. I don't think they're recent listing, no. They must have changed the name, and yeah, share price has just plunged over the last month or so. Maybe not plunged. Oh, actually, sort of. It's gone from $1 to 64 cents. I'm just going to have a quick look to see if this was named something else, and they've just changed the name. Oh, Live Verdum. Yeah, Live Verdum. Yeah. I actually did know that. Yes, sorry, I knew that. I looked at this before, maybe a few weeks ago, and was not that impressed. Okay, top losers by market cap. Pilbara. Pilbara was in an article recently saying, what a great long-term buy because it's not going to go much lower than this. Just don't know. We just don't know. It could drop. I think that was also, someone mentioned that in regards to NXDC. What a great long-term buy. Can't drop much lower than this. NextDC is not profitable. At least Pilbara is profitable, but NextDC is not profitable. In fact, forecast losses are to go up, so to increase, not to become profitable. And I'm big concerned about those sort of companies. I think they have to try to achieve for profitability and to grow through that. I do understand that it's a land grab, but I think we had this land grab argument back in 2021 for tech companies. So instead of going towards profitability, it was all about getting as much revenue as possible without even thinking about revenue or profit. And I think that was a big mistake. Zip. Adriatic Metals, I'll talk about that company. It's in my top 5. And I think, yeah, there's BetaShares geared. I think BetaShares geared Gigas, what I don't know how to pronounce it. That would be really good near the bottom. If you know where the bottom is, like 2009. So I don't think you can time the exact bottom. That's a time to get excited about gearing up. Not right now because, yeah, why? And Crypto Innovators, not surprising there. Okay, let's turn attention to the top 5 stocks of the day. Now, actually, before we have a look at the top 5 stocks, I'll quickly go through a few of the companies that did not make it. MetaVisor, trading hold, capital raising. I was going to be a little bit critical about this capital raising MetaVisor because share price has dropped a lot. And I think this is, you could argue this is really bad capital allocation decision by MetaVisor. Why not raise way back when the share price was at 58 cents and now it's 10 cents? So you're really diluting shareholders. But more than likely, they did realize they'd have to do a capital raising back then. So this is probably a sign that the company really needs some an injection of cash, and that is not a good sign, particularly because share price has dropped a lot. So I was looking at MetaVisor the other day because share price did drop below 10 cents for a brief period of time, and I was thinking, oh, that's a really interesting level, but I'll wait for this particular capital raising to see how much of a discount it is. We've already talked about BTM, yeah, Breakthrough Metals, Rocket Boots. I've already talked about that. Auric released What's something about profit? Yeah, net profit up by 212% to 4.1 million. Share market hasn't really reacted to it, but again, gold's down. And they did also mention, I think in the title, if it comes up, a company poised for astounding growth in 2025. I'm going to have a closer look at this. So this is one of those really small producers that I want to take a close look at. I did trade this, or I had been trading this, and then I got out and bought some mica metals instead. So I only want to own one of these. I might be willing to take a position in two, but the chart does not look good anymore for auric mining. So I'm glad I have transitioned from auric to mica. That was actually a good decision on my part. Go, Michael, making good decisions like that. And finally, Mesoblast. I am keen on this one now. And I actually am more keen on Mesoblast because the share price is down today on what I think is really good news. First children to begin treatment, Medicaid covers Ryan Seal. The share price did rally on this on open, and I think just a bit of negative sentiment in the overall company. And the market has driven share price down below $2. And I think this is a really intriguing level. However, if the share price remains below $2, that would be a negative move. Now, possibly I could think about buying a longer term position in Mesoblast and putting it into my super. That way I don't have to look at, following the share price every single day. I could do that. I do think the sell-off in Mesoblast has been overstated. Is that a word? Has been overblown. That's a better word. I think the share price decrease has been overblown based off what might happen, not only this year, but the next few years for Mesoblast. So keeping a close eye on this one, Mesoblast. And that's it. So now we can turn our attention to the top 5 stocks of the day. Let's start off with NFL. Can't forget this one, Norfolk Metal. Share price up 28%. So not only does it have an interesting ticker code, in my opinion, the share price is up 28%, so it's a pretty good day. And they've made, see if I can remember this one, something to do with copper in Chile, I think. So yeah, Norfolk to earn into Chilean copper project. Now the big thing about this one is how close to production are they? Transformational, they've called it, acquisition opportunity with highly experienced in-country team to expedite resource growth and development potential. So based off that, it's any sort of production is a long way away. So I'm a little bit less keen on Norfolk just because of that particular reason. Copper's doing really well. So I think that's really helped Norfolk Metals. And I'm assuming the other copper companies have done fairly well today. Let's have a look at Aries. Up. Oh, we're in the closing auction. Share price is flat. Sandfire up. Oh, no, down. What's the other one? Hillgrove. Share price up. Wait there, go back to Sandfire. So this is really weird. I'm pretty sure copper had a pretty good day on end of last week. So a lot of negative sentiment in these mining companies, even though a lot of these commodities, elements, whatever you want to call them, were up at the end of last week. So negative sentiment. Yeah, there you go. That's interesting. So a pretty good day for Norfolk. But let's have a look at the chart. Is this a reason to get excited for NFL? And a lot of excitement in this company back in November 2023. And this is, you can see, a lot of excitement which faded so quickly. Excitement lasted maybe 2 days. A share price increased 49% on the 24th, a further 7.9% on the 27th. It also increased 25% on the 29th, and then share price just plunged after that. And yeah, so that's a problem with these type of companies. You might see an increase in volume, nice increase or surge in the share price, but it might not last very long. And I would define when they did release an announcement back then, it was a weak announcement that the market overreacted to. So this one, maybe, it might be the same, but it's going to be very important to see how the share price goes in the next few days. I wouldn't be surprised to see share price pull back. If the share price goes sideways, that could be a good sign, but not the sort of announcement that would get me overly excited. So that's NFL. ADT, Adriatic Metals, they have a silver mine in Bosnia or Croatia, one of those countries. I always want to say companies when I should say countries. So Adriatic Metals, Share price down 10.4% on an operations update. So that's not good. So obviously the market is disappointed with the operations update. I did have not a close look at this one. I went through it really quickly. They talked about record quarter processing. They do mention, here we go, record quarterly sales of 33 million. That does sound a little bit low, an increase of 23% from quarter four. So only $33 million sales in the quarter. First debt repayment of $20 million, that's a good thing. Current cash balance of 75 million, with current debt balance to Orion of 135 million, total net debt of 85, compared to net debt of 129 at the end of fourth quarter. So how did they get that debt down 44 million if their sales were only 33 million? That's interesting. So I might go through this. No, I won't, because the share price is down 10%. So let's have a look at the chart for Adriatic Metals. So do they have their mine in Croatia or Bosnia and Herzegovina? It's not just Bosnia, it's Bosnia and Herzegovina. Did I pronounce that right? Bosnia. Yeah, there it is. Mining projects in Bosnia and Herzegovina. So there you go. Sorry for saying it's Croatia. Anyway, so the chart had been looking good. Is this a trend killer? This could be a trend killer. Now, the reason why it might not be is because the share price isn't at a lengthy low, a long time low. So the last time share price was this low was back, start of March. So it's not that long since share price was at this point. So I'm not sure if this could be considered a trend killer. But what I might do is go to my trend killer watch lists, and if I can find it, and I might just add it. See what happens. This could be a trend killer for Adriatic Metals. Okay, coming in at number 3, we have Orora. Share price down a fair bit on Friday. I think it was Friday, maybe it was Thursday. No, it's Friday, down 8.4% because they did something naughty. Maybe not them. It was a recent acquisition. So French Competition Authority, let's open this up again. I forget what they did wrong, price gouging or something like that. The French Competition Authority went to the site, went to their location, so Saverglass office in France, and anti-competitive practices. Yeah, that's right. Anti-competitive practices in the French beverage glass container industry. Now, this particular announcement they did release today was more of a clarification that this is not only Saverglass related, it's the whole industry, sort of like that. That's what I got from it. So I did have a read of this. It is currently understood that the investigation relates to a period prior to Aurora's ownership of Saverglass. That doesn't matter. Does not matter. Although it might be beneficial for shareholders who look at ESG issues, and it could be saying to those sort of investors, well, this wasn't our fault. No, we didn't do anything unsavory here. Anyway, a period is marked by major events including COVID pandemic and the start of the war in Ukraine, which led to import costs for glass container production, including energy, key raw materials, and gas increasing significantly, as well as increased freight costs in an environment of very high inflation across Europe. The complaint originated from participants in the beverage industry in France regarding price increases, and at this stage it appears that only a small number of those are customers of Saverglass, representing minor trading relationships. So maybe this is just a storm in a teacup. Although if there was a storm in a teacup, the teacup would be blown apart. So it's not a very good analogy. Anyway, let's have a look at the chart for Orora. Was it this one that the chart was looking not interesting, but the share price was getting to a level which I found, share price is at the last lows we saw back in August of 2024. So it is at an interesting level, but then I had a look at the weekly chart, and the share price on Friday went to a 10-year low. Yeah, the last time share price was at these levels was back in late 2014. So that's not a very good looking chart, but who knows? Maybe this, if they can turn things around, the upside could be double from here. So this is definitely one. If I do see a bit of a shift in trend, I might take a trading position, but I need to see a better chart. And at this point in time, the chart doesn't look that good. And I wouldn't buy this just because it looks good value, because, not the sort of company for me. Okay, that's Orora coming in number 3. Now on to number 1 and number 2. Both made acquisitions. The first one is Environmental Group. And the reason this one is number 2, not number 1, is because it's a smaller acquisition. I suppose it's a smaller company. Share price up 4.17%. The other thing is the chart probably looks a little bit weaker for Environmental Group as well. So Environmental Group to acquire advanced boilers and combustion. So I don't know anything about boiling and combusting. So agreed to acquire leading Australian industrial boiler service and manufacturing business, Advanced Boilers and Combustion, for 5.5 million to be funded from existing cash resources. So it's not a big acquisition. The company reported revenue of $16 million in financial year 24 and normalized EBITDA of 1.6 million. So it's also interesting the different language both companies use. So they have both reported revenue, but one reported normalized EBITDA and the other one reported something a little bit different. So they're going to report whatever looks really good. Now, I would prefer the other companies, they used EBIT over normalized EBITDA. So I do definitely prefer EBIT over EBITDA. Anyway, so approximately 6% of advanced revenue is service revenue, which I'm not the biggest fan of, which is recurring in nature, aligning with EGL's strategic growth plans. Look, I don't know anything about boiling and combustion, but is that considered environmentally friendly? I don't know. And headquarters in Victoria, operations in New South Wales and Queensland. Right there. So it says the operation, they have the head office in Victoria and operations in New South Wales and Queensland. I'm assuming they also have operations in Victoria. They just left that out. That would be weird if they're headquartered in Victoria and just have operations in the other 2 states. That would be weird. Generates most of its revenue from clients in the food and beverage industries, paper manufacturing, hospitals, and meat processing. I'm trying to find the word synergies here because whenever a company makes acquisitions, they always say synergies. I have not seen a single use of the word synergy here. I'm going through this very quickly, and I am shocked they are not using the word synergies. It's like the most popular word to use when you're making acquisitions. Okay, so let's have a look at EGL's chart. This one has been looking weak lately. I've been looking at this one every week, and it's been looking weak. So a really nice uptrend up until about October. So about October, start of October, share price got as high as 42 cents. It was looking really good. And then, the share price plunged back in early November. It could be the AGM maybe. The share price was plunging before it really dropped like a rock on the 13th of November by 14%. A nice little rally, but I think that was just a dead cat, maybe not a dead cat bounce, but that was sort of investors looking where the share price is and going, oh, I can buy this company at a cheaper price now, not realizing there was something, I wouldn't say wrong with the company, but something else was at play. New information had come out, and that's what the share price has kept on falling. We've seen another rally recently, and again, this could be just like a rally, one of these rallies you see in a downtrend. So I wouldn't be trading this just yet. I need to see that the downtrend has come to an end. So that's Environmental Group. Coming in number 2, the stock of the day is Southern Cross Electrical Engineering. Now, share price up 6.4%. So I think this does deserve to be stock of the day. An acquisition. I have been trading this. I am trading this right now. Very close to taking a small loss. So very happy with this. I have sold out of in fact, I'll talk about this after I've recorded this. So Southern Cross Electrical Engineering have made an acquisition of Fire Force Holdings, which is a fire protection company, something like that anyway. And you will see the word synergies in this. Now, this is by far a bigger acquisition than Environmental Group. So we're talking about $53.5 million. That will be the possible total. If they get some nice EBIT growth in financial year 26 and 27, funded through existing cash reserves. So I do like that. And forecasting EBIT contribution of at least $10 million for financial year 26. So Environmental Group used normalized EBITDA and Southern Cross is using EBIT. I do prefer EBIT. And when you do look at the forecast EBIT versus how much they paid, it's not that bad of a price. I don't mind the price. So we're talking about 5 times EBIT or forecast EBIT. So this is, where is it? Fire Safety Solutions Company. And it's in New South Wales and Queensland, I think completely, mostly New South Wales. And they also released a nice little presentation alongside this. I like the presentation. I like the acquisition. Looks like the market liked the acquisition. I have no problems with this at all. It really fits in with the company. And now I'm looking for the word synergies. I have no doubt they've got it here somewhere. I have no doubt they're going to use the word synergies in here. They talk about strategic rationale, and that's when you might see the word synergies. Or they will definitely use the word cross-selling. And I'm shocked. If I can't find the word synergies, I'm shocked. Very shocked, yes. Maybe they've used the word synergies in their presentation. Now, if they haven't used the word synergies, I'm even more impressed with this acquisition because that always seems to be the go-to word. We're making this acquisition because of synergies. But they will definitely use the word cross-selling. I just need to find the word synergies because I just can't believe they're not using it. Okay, synergies, come on. I know you want to be stated here. Oh, they did use the words EPS accretive. Well, actually, they use the words 18% EPS accretion. And yeah, so you'd want it to be EPS accretion, otherwise you wouldn't make the acquisition, in my opinion. And it's amazing. I just can't. It's sort of weird because the acquisition of Force Fire is consistent with the company's strategy to add adjacent and complementary capabilities and increase exposure to services and maintenance style works and recurring revenues. And they're not using the word synergies. That's fantastic. I like the management of this company even more now. I do get a little bit turned off by the word synergies. It's just something I just hate to see. I'm just shocked they haven't used it at least once. And have they used cross-selling? Here we go, cross-selling. Cross-selling opportunities, yeah. But no synergies. Go, Southern Cross Electrical Engineering. And now let's have a look at the chart for Southern Cross. Close to my sell price. In fact, the share price did fall below my sell price on the 19th and 20th of March. And we've seen a nice rise. So I bought at $1.70. So I'm not that down from when I bought. But the chart of the share price is not an uptrend. And I think this company could be looking a little bit cheap. So the price earnings ratio is like 14.68. And with this acquisition, that's actually looking quite attractive now. Anyway, so that's Southern Cross Electric Engineering. And now on to the only comment. Joshua 0689. Hi, Kneppy. Right at the end, you mentioned debt recycling. Do you typically use those kinds of techniques, and how much weight do you give to tax efficiency in your trading? Cheers. Lots to think about in this video. So debt recycling. I'll be honest with you. Yes. So in my first 10 years of investing, yes, I did use debt recycling. So what I would do, instead of paying off my mortgage, I'd put all my money into my investing, and I would take advantage of margin loans. And on occasion, I would in fact, initially I was paying down my debt, and then I got my debt, like paying down my mortgage, I mean, and then I got all that, and then I invested it all into the stock market when I became more comfortable. And so I was doing a lot of this during my first 10 years of investing. So in fact, it was less than that. It was like 8 years. So when I first started investing, it was 2011, I forget. It was just after 2009. I forget exactly what year. It was after I bought the house, so it would have been after 2010. So I would have been net debt $200,000 at that point. Yeah, net debt $200,000. And I still remember when I became net cash. And that was in 2018, I think, 2018. That's when I became net cash. And then I quickly quickly grew that to $1 million in net assets. So it's very true that the hardest, the slowest your returns you're going to get in total amounts is the first 10 years of investing. And since then, yeah, my assets have gone up significantly. So up to $1 million in net assets right now. That does not include my super. And one of the ways I did that was just using a little bit of debt. Not a lot. And I did pay down completely my mortgage in 2020, early 2020. And then I had to go back in the stock market, but I never went back to my mortgage after that. So I've been mortgage free since early 2020. Anyway, so I'm pretty sure that's what you're talking about in regards to debt recycling. And I might do that again. I might use, if I see the market drop, I think it's all important when it comes to the market. If I see the market at a really attractive levels, I will use debt. I will use my margin loans and I will use debt because it's at attractive levels. Where the market is right now, I more than likely won't use debt. So what is the definition of debt recycling? I'm pretty sure I'm using it in the right terms. What is debt recycling? Converting non-tax deductible debt to tax deductible debt. Yes. So yeah, so like margin loans, you get a tax reduction. So you do less than you can claim the interest on your margin loan as tax. And I was talking about that. If I was getting a loan, I can get a tax, benefit from that. Yes, so that's one of the attractive things of using a loan because you do get tax benefits. But what I was suggesting, what I was thinking with my parents is I could borrow like $500,000 from my parents, claim at 5%. I'm not sure if I'll be able to claim that interest back from the tax man. I'll have to do a little bit of research. And I was also going to suggest to them, I can give you 10% of the profits I make. But that's a lot of pressure on me then because then I have to make profits. So if I have one bad year, that could destroy everything. So I'm not sure if I'm at that point just yet. I'm not a big fan of debt. Anyway, so that's the first bit. Do you typically use those? How much weight do you give to tax efficiency on your trading? Not a lot. Now, there was one position where I'm going to wait before I sell. That was the Ansell, I think. And the main reason is I've held Ansell for just less than 1 year. And that is when it becomes important because if I sell just one day before 1 year, my taxes are going to be higher because you have to pay more taxes. I forget exactly how much, but when I do my taxes through Superhero, they actually tell you, they actually do it for you. So there is a tax benefit there could be a tax benefit to waiting like a few days to sell that. For example, another good example of this, and this is a hypothetical, say if I bought CBA or even CSL, now we'll say CSL back in 1997, and I'm up, a couple of $1 million, there's no way I'd sell that because of the tax implications. You get a nice dividend, no way I'd sell that. Absolutely zero reason I would sell CSL with that sort of gain, just because of taxes, yeah. So the capital gain would be through the roof. So I think you do have to take into account taxes on occasion. And yeah, it'd be pretty silly for me to sell Ansell 1 day before I've held it for over 1 year because of those tax implications. But if I've held a position for less than, say, 10 months, I wouldn't even look at it. I wouldn't even care. So hopefully I've answered your questions. And hopefully I've answered debt recycling. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. And that's it for this video. Have a good day. Bye.